Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at Facebook, we're going to look at Tivo, we're going to look at USO and XLF. Alright, so first up, let's take a look at Facebook. It dropped on Friday after admitting that it was hacked. As you can see here, 50 million user accounts. So yeah, it was under big pressure. So being under pressure on Friday, it did close down 2.5%, over 2.5%, and the bearish close was below the middle Bollinger Band. Now this is an old chart, so the annotations are old over here, but the reason why I wanted to show you it is because of this gap. There's a gap over here back in April between high of day on this candle, or high of day on this candle, and low of day on this candle, and right now it's been holding the bottom of the gap support level from back in April. That's this green line right here, and so in after hours trading on Friday, it closed down at 163.70. Okay, and so that's putting it below the middle Bollinger Band, which is currently at 164.94. It needs to get back above that level. If it trades back above the middle Bollinger Band, then it could get a new uptrend going. That's what it was trying to do last week until this bad news came out. So it's all about 165. That makes it really simple. Above 165 will signal upside potential, and below 165 will signal downside risk. Now keep an eye on the bottom of the gap level. If that were to break down here, you could see a pullback down to the lower Bollinger Band. You've got down here at 157.62, and then below that you have the low close from back in March, which is down here at basically 152.50, and so that's the downside risk. If this 161, 160 to 161 support level fails to hold, you could see a drop down to that 157 zone, and if that broke 152.50, that would be coming down, retesting the March low, and potentially getting a bounce off of that level. Now keep in mind, if it can get back above 65, it could get pushing higher again, 165. Let's look at the weekly chart here for Facebook. Now this is another chart that I've posted before in the past. Back when it came down and hit the 50-week moving average, it bounced, and then here it came down and hit the 50-week moving average, and then dropped to the 100-week moving average, where it did find support. Well, right now it's holding that 100-week moving average support zone. That's currently at 162.50. So keep an eye on that level this week. It hasn't closed below that level you have to go years the last time it's closed below that level for the week. So that's kind of the line in the sand this week. If it can stay above 162.50, it can get a bounce going. It has to get above 165.29 EMA4. Once again, there's that 165 level. So to make it really simple, above 165 once again signals upside potential. Below 162.50 is going to signal downside risk. You could see it drop down to this low close down here in April, and come down and test that lower Bollinger Band down in the 154 support zone. Okay, so let's take a look at Tivo here. So yeah, it's been under pressure with Amazon coming out with a new device, saying, is this going to be the end of Tivo? So you could see that they announced their second quarter earnings last month, and they said that there might be some buyers that are interested in their products and their intellectual property portfolio and their 22 million subscribers. But then that was before the Amazon news came out about their DVR business, and so that really sent the share price tanking. So yeah, check out this article. If you look here at the Tivo daily chart, it's trying to find support here. You can see the zero close. That means it opened and closed at the same level on Friday, 12:45. This open and close did form a bullish reversal pattern. Bullish hair me cross. So a doji formed. When a doji forms during a pullback, many times that signals the stock is setting up for a bounce. If you look down here, you can see you've got multiple red candles in a row, and then on Friday you have what's called a doji candlestick, where the open and the close are the same level. And so this is a classic bounce pattern, during a pullback. And so what you can see is the candles working back up to EMA4 here. Notice how all the candles are riding that level lower. If it can break above that level, that's going to be your clue. Okay, yeah, yeah, this bounce is happening, and then it has to get above the 50-day simple moving average at 1275. The trading and closing above 1275 would be your clue. Okay, yes, this bounce is for real. It's really happening. If both those two levels remain resistant, you're going to see more downside risk. Why did it get the bounce on Friday? Well, I'm seeing right here the reason why, and it's a downward gap fill. So there was a gap between high of day on that candle and low of day on that candle between the 20th and the 21st of August. Notice how the doji filled the candle, or filled the gap, and then notice how the close was just above the top of the gap. So right now it's about staying above 1240. If it dropped below 1240 in the bottom of that gap, that's going to signal downside risk. If it could hold that level, it could get a bounce going. Okay, so now let's look at United States Oil Fund. So yeah, if you're trading oil, this is a good way to go if you're an options trader. Yeah, it does well. You know, small moves can return some nice gains if you're on the right side of the trade. For options traders, USO is a good way to go. It has a very strong uptrend going right now. It's been pushing really hard. It's above that upper Bollinger Band again, riding EMA4 at 1531 support higher. Notice how there hadn't been a close below that level since down here on the 17th. You know, what's going on is it broke out above what's called high close horizontal resistance. Over here in June and July, there was this high close level, about 1505, and that level broke last week with the close above. It held on the pullback, and now it's breaking out higher. So from last week, there was a high close level down here around 1525 or so, maybe 1527. Needs to stay above that level to keep pushing higher. As long as it can stay above these two levels, that should signal the chart is strong. If it were to drop below, it would get back into this consolidation, maybe test that middle Bollinger Band down here at 1478. If you look at USO on the weekly chart, yeah, it has a very nice uptrend going right now. I mean, okay, so you do have RSI at 65, so it's still not at that 70 super overbought level. It has more room to push higher. You know, look at ADX with plus DI, minus DI. Plus DI is just starting to hook up, so it's not like it's at frothy levels. You know, hitting 40 is frothy on plus DI. You know, at 26 it has room to run, and so right now it's in this upward channel. Notice since it made a bottom down here in 2017, it's been heading higher. This is the top of the channel right here. So right now it's putting the top of the channel up here around 1650 or so, and what it needs to do is break this closing price from back here in October of 2015. This red line right here at $16. That's the big level to break. If it stalls out at 16, that's where it could pull back. If it breaks above 16, it could get moving. There is an unfilled gap from back here in 2015 between the last week of June and the first week of July 2015 on this weekly chart. And so, you know, having an unfilled gap, you know, that does set it up for a nice target above. So, you know, keep an eye on this 18 and 19 level. That's the gap level. It would have to break above 1650 to get to that level. To the downside, you want to see it hold ascending support. You know, it has this ascending support level, and really it's all about the middle Bollinger Band. That's what it's lined up right now. As long as 1426 is holding, the bulls are in control, and it signals more upside potential. Now that it broke above the high close for 2018, that was the close back here in June, right about at $15. It needs to stay above 15. If it dropped below 15, it could consolidate. So watch that level closely this week. Okay, let's look at finally at XLF. This is the Financial Select Spider. Okay, so so many of the talking heads are, you know, CNBC, you know, they're very, very bullish on the financials, and everybody's been wrong for, you know, pretty much they've just been going sideways, and then a lot of people got this last Fed interest rate hike wrong. They were expecting a bounce last week, and it didn't bounce. It dropped lower, and so as you notice, you have multiple red candles in a row, and you know, it got this was the real red flag when it got below the middle Bollinger Band and the 50-day simple moving average. It looked like it might bounce off of the red line. The 50-day simple moving average is the green line there that had been holding, and so the drop below signaled downside risk. Just below is that 200-day simple moving average, and that's where it held back in August. It bounced right off of that red line, and so it looked like that could possibly happen again, and that maybe it was going to bounce off this 2790 level, and that didn't happen. It actually gapped down and dropped further, and it dropped below the 100-day simple moving average. So that's really bearish. That's really signaling the bears are strong right now. It needs to get back above 1270. If it could get above that level, there is a gap between low of day on Thursday and high of day on Friday, and so you'd be looking for a gap fill to the upside if it could get moving. If it gets a bounce going above 2770 next week would be bullish. If it drops down here below this ascending support, basically where it's at right now, or horizontal support, it's going to signal downside risk. It really needs to hold this 2757 level. Just below is 2750. Really, what could happen here is it could work its way down to this 300-day simple moving average at 27, and I would look at that level as a solid bounce level if it were tested. That looks like where it could be headed if it fails to get above that 100-day simple moving average, and EMA 4 remains resistance. Now it is at the busted through the bottom of the lower Bollinger Band there, and the futures are up right now, so it could be set up for a technical bounce. Keep an eye on that 2770 level tomorrow. Now there is a reason why it could be set up for a technical bounce, and that's why it's always good to look at multiple time frames. Look at the weekly chart here. The weekly chart here for XLF is hitting a key level, okay? So it's down 4% for the week. It's right at the 50-week moving average in the middle Bollinger Band, which is the 20-week moving average. So that's currently at 2764 and 2760. If 2760 holds, this is where it should get a technical bounce. It's going to be really bearish if that level breaks. If it does, it could work its way down to 2650 and test that low close support down here in June, and the lower Bollinger Band down at 2648. So it's going to be really important this week that it holds 2760. Okay, thanks a lot for viewing this video. To get moving higher, it's going to have to break above this 2875 resistance zone. That was the high close from back here in from September. Okay, we'll see how October works out for the financials. Thank you so much for viewing this video, and if you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.